Hi guys, this is Kumel from the Learning with the Mirs, and I was requested by our member on Facebook, and she said that she's having a problem with FIFO, first in first out method, and that's an inventory method in accounting. So this is my table. I have the date when I do my purchases and my sales. I have the purchases, I have the sales, I have the inventory. QPT, quantity, price, total. Quantity, price, total, quantity, price, and total. I'll be recording, I'll be showing you how to overcome and go through this. It's pretty much easy. Now, let me say, I have a buyer that comes to me asking me for cameras, and I have a business of cameras, and I need to, I am going on with recording my inventory stocks and all that stuff. So he comes up telling me that, hey Kumel, you got cameras? I said, yes, I got cameras. But the first thing I have already done in my book of records is to record my beginning stock of quantity. 1st Jan, I had 100 cameras at a price of 20, which means I have 100 cameras in my stock at a price of 20. So always remember 1st Jan. Always remember your beginning inventory goes over here as 100 at a price of 20, which means 2,000. He comes to me, tells me, hey, come on, I need 70 cameras from you. Do you have them? And I say, yes, I do have them. All right, so can you please give it to me? He comes to me on the day of 4th of Jan. And I'm doing my sales, I have sold him, so I'm doing my sales. So I'll be recording my numbers in the sale column. So, I have sold 70 cameras to him at a price of 20, which means 1,400. Now, I have sold. He's gone, he's happy. Now I have to work on with my inventory record. I have already sold 70, and which means I had a stock of 100. I sold 70, which means I have 30 left in my stock, and I'll be recording at the same price. This is 600. Now, I know that I'm going low with my stocks. I need to buy more. So what am I going to do? So I go outside and I purchase some more cameras. I purchased 80 more cameras. On the 10th Jan, I go out to the other markets and purchase 80 more cameras. So if I've purchased, the record will be showing under my purchases, which is 80 cameras, but I have bought it at the price of 21. I have set the price of 21. I might have bought that. I might have bought that cheaper, but I'm just pricing my own price on it. So it's $1,680. Now, the thing that I know is that if I have purchased, then obviously my inventory will shoot up. So I'll be recording the same thing over there. Recording it again, 30 and 20 equals to 600. I'm just gonna put a dot over here because I don't want to confuse you. I'm gonna write the remaining 30 down. So I wrote that down. Now, purchase. I purchased something right now. I'm gonna bring the purchase side over here, which means 80 with a new price and 1,680. Dot, 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 dot. As I told you, do not want to confuse you. Now, Over here, as you see, I have a total of 110 stocks available with me. This buyer comes to me again, tells me, hey Kamal, I want to buy 40 more stocks from you. I want to buy 40 more stocks from you. And I tell him, yeah, I got some. So he says, all right, I'm going to come to you tomorrow. Now, he came to me on the 22nd of Jan. The reason I need to record the dates is that it's an invoice. I mean, it would help you for invoice. And it would also bring you as a proof that yes, you have recorded this invoice at this particular date. If you have no date, then there can't be any problem coming up, and your relation with the buyer would just finish off, and there would be no one buying your products, because the buyer might go outside saying that, well, he does not keep up with his inventory. So now he says he wants to buy 40. I know that in my let's name this inventory first and inventory second. In my first inventory, he wants a 40. So obviously, first in, first out method means first inventory. That comes first out. So 30 comes out. I'm just going to use the same price because it is coming out from us. It is coming out from the price of a 20. The stocks are coming out at a price of a 20, and that is equal to 600. Now I'm done with this. So I'm done with this. Let me just cross this out. I'm done. Why? Because all the stocks. Now remember, this buyer needs 40, a number of 40 in quantity, and I have sold him 30. I need 10 more, which means I'm going to write 10. I'm going to get 10 out of my second inventory, as I've already given my first inventory. But this 10 will be having a price of 21 because I am touching my second inventory, my second stock at a price of 21, which means I have sold him 10 more, which means I've sold him 40 at a price of, let's not write it right now, at a price of $810. 30 plus 10, inventory, got it done. He wanted 40, he's happy, he's gone. Over here, again, I'm going to record because I sold him something. I'm going to record again the remaining balance. The remaining balance would be 80 minus a 10, because from this 80 stock, I had removed 10 to fill up my buyer's my buyer's needs. So I remain with 70 with a price of 21, and that is going to be 1470. I'm just going to put a dot, as I told you, do not want to confuse you. Okay. The other thing is that he comes to me again telling me, hey, come on, I want another 20. And on the 28th, he comes to me, says, I want another 20. And on the 28th, Jan, he comes to me telling me, come on, show me your stocks. On the 28th, Jan, he wants, how much did he want it? Yes, he wanted 20 more stocks. 2 was kind of crooked. He wanted 20 more stocks. Let me just put a line just to separate this. He wanted 20 more stocks. But I know that I will not be selling him 20 more stocks for the price of 20 because that stock is gone. But I do have a stock over here which says 70 with the price of 21. Obviously, I'll be using 21 instead of 20. Why do I want to go back? No, I will sell you at 21. And you sold it to him for a price of 420. And now, you know you have sold him 20 from the 70 quantity that you had from your stocks. You had a stock of 70, you sold 20, which means you are left out with 50 at a price of 21, and that is going to be 1050. Okay, now I know it's a business. I need to buy, sell, buy, sell, buy, sell. So, what am I going to do here? I'm going to go to the market on 30th Jan. I'll be going to the market and I'm going to buy 100 cameras at a price of 22 because I think I got a good deal over here. 22. And obviously purchases makes my inventory go up, sales make my inventory go down. Purchases, I purchased 100, I'm going to add it up here. Just going to make this ... because the transaction was over. But I still have 50 in stocks. I'll be bringing 50 down. My 5 is just bringing 50 down at a price of 21, which is going to be 1050. But then I have 100 more, which means I'm going to go with